Hey everybody, welcome back to another episode of Matt Money. I'm your host and your boy, Matt. I will be talking about Fundrise today. So we're going to be doing a quick Fundrise update. So those of you guys that have seen my M1 Finance update, it's pretty similar along those lines. So it'll just be talking about a little bit of reflection that I had over the past couple months, and then really just a kind of shift into how I utilize Fundrise within my investing portfolio. So before we hop into it, just wanted to give a quick note here that about two-thirds of you guys aren't subscribed. So Jessica, if this is your second or third time watching and you haven't already subscribed to the channel and you plan on continuing to watch the channel, I don't know what you're doing. Just hit the subscribe button. We'll get through this together, and we'll have a great time, and you'll learn a lot. So that's all I could really ask of you at the moment. Just hope that you guys are continuing to learn and benefit from these videos. So actually hopping into Fundrise itself. So I started the portfolio in Fundrise in June 2017. So we're actually going on 3 years of actually utilizing Fundrise, and you can see just based off of the portfolio value that for about 2 years I didn't really do anything with it other than just kind of keep money in here and let it kind of build. And more recently I decided that this is a decent opportunity to kind of diversify outside of the stock market. And so what I started to do was contribute about 137 bucks every single month. And the reason why I was doing that was because back in, I guess, around this early 2019 timeframe, they came out with a tool that basically said, hey, if you want to be in the next 5, 10, 15, 20 years, your portfolio to be X amount or Y amount, this is how much you're going to need to contribute approximately on a year-over-year basis or month-over-month basis. And so for me, it kind of said, hey, you contribute 137 bucks over the course of 20 years, you're going to get close to $100,000. And so you can see relatively quickly over like the period of a year, I basically almost tripled the account value, basically 2.5x the account value, starting from like 1100 to basically 2500, 2700 rather. And then I decided to kind of take another strategic shift. So you can see that there's these little jumps up here, which are about 137 bucks each. And then you see this much larger jump here. And what you're actually going to see, I think, is doing this sort of bump here twice a month. And so the actual thought now is what I will do is in the past I'd kind of just done the 137 bucks. What I'll actually do is be doing 375 bucks once a month. So let me correct myself there. I think earlier I said twice a month. So this will be basically tripling the amount that I had put in here before. And reason being is real estate, while it's a good portion of the portfolio at the moment, it's really about only 10% of the kind of cash flow that I get that's not from my 9 to 5. And so I did a quick look at what I had in terms of cash flow coming into the portfolio, and so about 1,000 of it was coming from dividends, 200 of which was coming from dividends from REITs or from Fundrise or Cardone Capital, and then another basically 40 to 50% was kind of coming in from YouTube and Shopify and stuff like that. So what I wanted to do was kind of even out the amount that was kind of coming from real estate. And so what I might do in the future is obviously continue to invest in real estate investment trusts and stuff like that, but concentrate a little bit more on how much is coming from physical real estate as well. And so if I can contribute more to, say, a Cardone Capital of the world, Fundrise of the world, that'll allow me to really get into how much money I'm making from physical real estate. So as you can see here, I actually changed to the supplemental income plan. And so in the past, I'd been actually part of the supplemental income plus plan. But what I basically want to utilize this real estate for is to basically fund other ventures, right? So whether that's dividends, whether that's other websites, or whether that's physical businesses, I have this kind of cash flow that can kind of come in and help basically provide an underlying cash flow that I can then utilize to put towards other businesses. And so that's the hope at the moment, is to kind of gain this every single month. And so at the moment, with contributing about 375 bucks a month and getting about 4 to 4.5% sort of yield, we're looking to get anywhere between like 12 to 16 bucks every single month in terms of annual income growth. So I add, let's just say 375 bucks, or round it up to 400 bucks. Then I get, let's just say, 4% off of that. That's as close to 16 bucks annualized that I'll get in sort of dividends coming up. But I know investing in this supplemental income plus will also raise the amount of kind of dividend yield that I'm expecting. And so while I've in the past kind of gotten that 4 to 4.5% sort of income range from dividends, I anticipate going forward it's going to look a little bit better. So you can actually see at the moment, just based off of where we're at, for Fundrise, the year-to-date performance is really only coming from these income REITs. So growth REITs at the moment are really taking a pretty big jump pretty big hit. And you can see really the income REIT here, number one in 2019, are really the only ones that are returning anything. You do have some minor returns coming from the West Coast REIT, which is kind of a growth sort of REIT. Then you have a income REIT 3, which is actually at 4.1%, and income REIT 2019, which is at 4%. So the majority at the moment of the money that's coming from the portfolio is coming from these income REITs. And then if you actually were to go and, let's say, expand the income REIT, and you look at the estimated returns, a lot of that's going to be coming in the form of dividends. A very minor amount will be coming in the form of, say, appreciation. So this is kind of what I'm hoping to do in the future, and continue to get some more of these income streams kind of coming through from this, and getting a lot of the income from these income e-REITs. And the hope is that we continue to reinvest them as we need. But in the future, once we get it closer to, let's just say, $50,000, $60,000 in a couple years from now, we can really start to take that as kind of like an extra income on a quarterly basis. And by that point, it'll probably be yielding a couple $100 every quarter. So if we were to say get it close to $100,000, I'd be anticipating anywhere between $5,000 to $6,000 a year in sort of dividends coming through. So that would be anywhere between $1,200 to $1,500 every quarter kind of coming through. So if you were to kind of say 50, 60,000, take half of that, right? So probably anywhere between $600 to $750 every single quarter would be expected. And so I can utilize that to either help pay for a car payment, or help pay for a mortgage payment, or just help with another business if that kind of is something that I need. And so in terms of the amount that I'm actually contributing to Fundrise, it's relatively low compared to my overall, I guess, income. So I'm making, I guess you could say, north of $10,000 a month for my normal income, and then with the dividends and stuff like that kind of coming in as well, making closer to, like, I guess you could say, $12,000 to $14,000 a month. And so 375 bucks in the grand scheme of things isn't a lot. It's probably close to 3%, but it's just another a way that I can kind of add it in here. And so if you were to kind of say how much I'm actually contributing, it's probably closer to like 5 to 10% of what I'm actually contributing to, say, investments, because I'm generally speaking saving about 50% of what I earn. And so it's looking pretty good. I can't complain at all. I mean, I'm looking at some of the realized returns that are coming through, and the returns to date, which are kind of coming through. And so far, so good. I mean, it's at like 7 to 8% returns, which isn't awful compared to like when I first started looking at, say, investing in Fundrise. You were seeing like 30% return years, and just like in 2019, we saw a really good return year as well. So comparative to that, it looks pretty good. But in the grand scheme of things, you're not going to see the volatility like you're seeing in a lot of the marketplace that you're kind of have been dealing with over the past 2 months in early 2020 timeframe. So depending on what you're kind of looking for, it could definitely be something that is nice for you to kind of keep in your back pocket. And you can see how quickly the dividends kind of grow ever since I've kind of got into more of the reinvesting aspect of it. So it's kind of leveling off at the 12 to $13 every single quarter range, and then it slowly started to increase as I started feeding it a little bit more. So now we're almost 2.5 times more in terms of the average dividend we were receiving just not too long ago. So maybe like 2 times more than the average dividend we were receiving just about a year ago. So Hopefully with the continued investment, it'll continue to increase, double, triple over time. And with the reinvestment as well of those dividends, they will hopefully kind of take a month and an idea of their own. So um, just this alone, this 266 bucks is a quarter of what I used to contribute on a monthly basis. So think about it. After a year, I'd be contributing basically another month. So it'd be like 13 months of contributions compared to, say, the normal 12 months. But as we contribute 375 bucks a month, we'll see this hopefully get into the hundreds of dollars of range relatively quickly over time. So if it was able to double by only, say, adding 137 bucks for a year, if we're tripling that almost, just imagine how quickly this is going to grow throughout time. So really that just is it. I wanted to just give you guys an update as to what I'm kind of transitioning to, going from 137 bucks a month to the 375 bucks a month. And that's just not going to say all the dividend or the real estate investments that I'm going to be doing. So I'm going to be doing REITs as well. So that's definitely a part of it. And I'm also planning on contributing to more of a physical real estate kind of savings account as well, where I'm putting aside 500 to 1,000 bucks a month. I haven't figured it out exactly yet, but hopefully what that can do is save up for, say, physical real estate. And maybe once I get to a point where I have the enough money to buy a deal, I could sell either a portion of the real estate investment trusts in my individual brokerage account and use that in combination with the money I have in my personal savings and purchase myself a deal. So the benefit of that obviously will be able to get equity build as well through leverage, right? So at the moment, I'm mostly just focusing on the cash flow of things. The real estate investment trusts are obviously focusing on the cash flow of things. And so if I do get that physical real estate aspect of things and a mortgage in my name, that will allow me to build equity in a property. And so that could also be utilized in the future in terms of leverage and being able to take out, say, money against it to potentially invest into other things like online businesses or whatever, right? So it's just the flexibility of having that sort of mortgage and that equity that I can then utilize to put elsewhere. So but that was relatively it, guys. Just wanted to record this video and share that with you guys. Just trying to get a couple of these videos knocked out to kind of give you guys an update on the strategy that I'll be kind of going forward with. So hope that finds you guys great. Hope it finds you guys well. And I'll see you on the next one. Deuces.